your thoughts on the US dollar right now? I hear people talk about maybe in like 10 or 15 years, with all the money printing going on, that it could like fall from the reserve status. Like, what would come in? I'm just curious, what are your thoughts on the US dollar right now?
Yeah. So for me, it's yeah. If you're to absolutely, I'd agree. Fundamentally, all right, you have a number of factors. Some of them will cancel one another out, all right? So one of the biggest things to watch in any currency movement is actually that interest rate differential and how it's likely to react over time. Okay. And quite simply, part of that is um, when the global investment world is moving monies around to invest, very often if they're sitting parking cash on the sidelines, they would rather do that in a safe jurisdiction which has an interest rate yield because they're holding cash and they want that deposit interest rate, right? So that doesn't exist in the US right now. The more likely that they are to hike rates, that will attract further investment back in, and that's what leads to the currency strengthening to a degree. All right, so suddenly, at the moment, in terms of purely holding cash, albeit again you're bringing FX risk into play, you'd be better off holding it in Mexico and earning a deposit interest rate, right? So the interest rates are one of the big drivers, and that's why you hear talk about inflation all the time, right? So if inflation goes beyond target, which is typically around 2%. And by the way, it's not easy to just turn on and off inflation. This is why they're talking into the future, because they don't want it to get aggressively ahead because it's hard to cool that then, right? So interest rates are always talked about because, and in terms of in the context of currencies, because that's typically an inflation, they're all combined. So as inflation ticks higher, how do you cool inflation? You increase interest rates, right? So that's the nature of that debate. All right. So when we see and people talk about the interest rate curve in the future, so interest rates don't just exist. The interest rates exists over a period of time. It's like a curve, right? So they're actually higher, are perceived to be higher in terms of trading these into the future, which is indicative that interest rates will rise over time. That's standard. Okay. But what we're beginning to see is a steepening at the farther date, which is in the further indication that the market is beginning to think that the Fed will move rates higher sooner rather than later. And again, that thinking to some degree has an impact on keeping the dollar a little bit firm, right? Overall, I think a number of factors, the euro being a big challenge in the context of a reserve currency. The Chinese yuan is certainly potentially coming into that sphere as well. I think over time, that combined with the ever extending and printing of money on the US side, the extending of the balance sheet, quite simply, it's supply and demand. If the more you print money, the more you devalue the amount of currency in your system, right? So personally, I'm absolutely, and that trend I would see extending into the Mexican equation as well, because look, each and every year that passes, Mexico becomes closer to what we deem the kind of Western feel economy. That emerging tag is disappearing all the time as it becomes clearer and clearer that obviously Mexico, being part of North America, is just moving closer to the US feel all the time, right? It's hard to see how anyone replaces the US anytime soon, but certainly as a reserve currency, the euro has that capacity. Certainly does the Chinese yuan, and they're loosening their peg to the dollar all the time. So for me personally, long term, I do see the dollar weakening. The problem with currency is that short-term horizon. We just don't know what happens. We don't see an event like a pandemic. And again, while the dollar is seen as the world's reserve currency and safe haven currency, anytime we see a spike in risk, be it a fall in equities or a global pandemic, that's when we're going to see the dollar benefit. So that's when we saw the move, March, April time last year when this pandemic kicked in. The market had been around 112, 113, 114. It looked like it was heading to 120, and suddenly we were back at 107. All right, that's euro dollar rates. And that was purely a function of the fear in the market. And when fear spikes, everyone moves their funds into US dollars because they don't know what to do. But I think over time, that dynamic is eroding all the time. I think we're absolutely likely to see the dollar became, certainly, euro is the big example. It's at 120 now. That's around the all-time average. But again, back in 2013, 14, we were up, the high 130s. So for me, if you were to ask me, do I think we'll see 130 or 110 again, or which we will see first, I'd be a firm believer we see 130 first. I think the dollar is going to struggle. And I think this belief that the Fed will act sooner rather than later, I'm not convinced of that dynamic. Central banks tend to be very firm in their communications with markets. We haven't even seen discussion of a taper beyond the market chatter. The Fed have remained very firm in what their outlook and what their guidance to the market is. And they rarely deviate from that, quite honestly, even though there is a panel there and they will debate these things. So my sense is, while the US economy has reacted really positively to the pandemic, there's still challenges there that I think we don't quite yet understand. The equity markets are at all-time highs. Again, it's a bit like currencies. You can have people who convince you that we'll continue to go higher. You have others who say everything is extremely overvalued. And currency is a bit like that. You could spend the rest of the week, Fletcher, and people would convince you why it's going to be at 25, Mexican peso will be at 25, and then you'd be convinced for the rest of the week why it will be at 17. It is crystal ball stuff, but my view is the dollar will certainly weaken over time. Now, with the peso, traditionally, if we do see that lift in interest rates on the US side, that's usually the catalyst for a weaker peso. So I wonder, will that continue to play out into the future? But I don't think we'll see that anytime soon.